Good morning to all of you. I welcome all of you who are going to view this video and our distinguished speaker for today, Haresh Dua. Summer Audit brings the Chief Auditor Series, where I'm Deepji Singhal and my colleague Satish Chennai, a fellow professional. Both of us have conceived, designed, and will anchor this Chief Auditor Series, which basically will bring to all of you number of eminent personalities in the chief audit executives, CFOs, CEOs, audit committee members, regulators in the field of internal audit. Because what is the best way to learn is to learn from people who have made the journey and reached the top. So that's the way to learn, to understand what are the practices they follow, what are good practices they follow, how was their journey, where have they reached, how they conduct internal audit, and so on. So that's the best way to learn. So this video series is aimed at bringing the best practices, good practices of these eminent personalities to all of you.
So I think a good start is always required, and we are very happy that our dear friend Haresh Dua has agreed. We are very thankful to his organization as well, and JSW is such a great name in the corporate field. So Harish, it's nice to have you here, and we are very keen to look forward to hearing your views on both the company and where we stand today at the profession of internal auditing. And we'll post your presentation. We'll of course have a small chat with you, and completely, we are all ears, Harish. So platform is yours.
Before Haresh starts, let me just formally introduce him. I think that is in right order. Though Haresh is a dear friend, and I had the opportunity of going across and meeting him at his head office, which is a wonderful company, JSW. Wow. Haresh spent time there explaining, showing around the head office, and we spent a lot of time there. But wonderful company. But I'd like to formally introduce Haresh Dua. So Haresh Dua is a chartered accountant. He's a certified internal auditor. He's a certified information systems auditor, and he's a certified information systems security professional. He has a post-qualification experience of 28 years. He has worked with companies like Bartley Boy Limited, Godrej Limited, Future Group, and JSW. He has exposure to audit of manufacturing, infrastructure, FMCG projects, mining and retail industry. A vast experience. He currently heads internal audit and risk management function of JSW Steel Limited and group companies. The annual turnover is $15 billion. Yes, wow. You have heard it right. It is $15 billion. JSW Group is engaged in various businesses like steel, power, cement, port, mining, and sports. His experience includes implementation of ERM framework on COSO model, internal control framework, integration of risk management framework with internal audit, fraud investigations, information systems audit, implementation of ERP like SAP and FMG Pro, implementation of legal compliance software, due diligence audits. He is associated with Institute of Internal Auditors. He is the former president of IAA India Bombay chapter, and he has given presentations to number of forums like IAA, ICAI, Institute of Chartered Accountants of India, Bombay Bar Association, CP circles. I think he's given a very short profile. It is much more than that, but Haresh, over to you, please.
First of all, thanks to Deepji and Satish for your kind words, and thanks for giving me this opportunity of presenting my views on internal audit and how we do the internal audit in JSW Group. Just to start with, I would like to share a small presentation.
Reggie, I've made you the host.
I hope this is visible.
Yes, it is. Yes, it is. We can see it.
Okay.
Perfect.
Perfect.
I think there's no need of going through again. Mr. Deepji Singhal is already kind enough to introduce me. So this is my introduction. Just to tell you that, what is our universe in JSW Group. If you see that, it is a centralized department in JSW Group. So we give services to 44 companies. Out of these 44 companies, 40 companies are in India, 4 companies are in overseas, which includes, we have 2 companies in US, We have one company in Italy. We have one company in Fujairah, that is UAE. And out of these 44 companies, 5 companies are already listed on stock exchange. Because of so many companies, some of the companies also have audit committees as required by the law. So we report to 27 audit committees. Now, these 27 audit committees, if you see, the breakup is that 12 audit committees meet every quarter. There are 10 audit committees which meet once in a 6 months. And there are some audit committees which meet once in a year. So if you do a total data, it is around 73 audit committees we attend every year. And now you can multiply it by thinking that if there are 27 audit committees and if every company has 3 independent directors, then you will know that we are reporting to more than 60 to 70 independent directors. We also report to 7 risk committees. Apart from these audit committees, I already told you 5 companies are listed companies. There are other big companies which also have their own risk committee, which is separate from the audit committee. Mostly these risk committees meet once in a 6 months. Now, as far as operating units are concerned, we cover around 36 plant locations or operating locations. Out of this 36 plant locations, 33 plants are in India, 3 plants are outside India. Apart from that, we have a lot of stockyards, depots, and branches. So we cover all of that. Now, the turnover this year will be approximately 1,50,000 crores. It is now gone up. One of the important parameter which we track is that how much we are adding value to the organization apart from giving assurance services. So just one parameter is that last year our cost reduction was around 124 crores. Now, before coming to organization structure, how we structured our department, another thing, we need to understand internal audit department or risk management department is one component of whole corporate governance structure of a company. So if I take up talk about my flagship company, which is JSW Steel Limited. So at entity level, we have a audit committee and risk committees. These are the subsets of board of directors. In these committees, we have independent directors apart from the executive directors. So at entity level, you have a control where you have independent committees which are looking into the corporate governance. After this entity level, if you come to the operation level and process level, we have internal audit, process audit, and operations audit, which are being carried by an independent internal audit department. This department do not report to any operating person. We directly report to audit committees. Currently, I'm in charge of this particular department, that is audit and risk management department. So at process level and operational level, you have an independent group doing the audit and reporting to audit committees. Coming back to the transaction level, we have a system called pre-audit. What we do in those cases, the transactions are getting pre-audited if they cross a particular threshold limit. So you have controls at transaction level. Apart from that, our department also has implemented legal compliance software, which means that all the compliances are mapped. And if there is any non-compliance, there's a dashboard which is visible up to the top management. So this is at a transaction level. This is the way the whole department is structured, the whole corporate governance structure is structured. So at entity level, you have audit committees, risk committees with independent directors. At process and operational level, you have internal audit department, independent department, directly reporting to audit committees and risk committees. They are carrying out the process audit, operations audit. At transaction level, you have independent agencies carrying out pre-audit, transaction audit, which also includes audit of related party transactions and reporting directly to the board. And then you have a legal compliance software at a ground level to see that whatever transactions are being done by the company, those transactions are compliant, legal compliant. So what happens under me for each and every company? I already told you we are auditing 44 companies. So we have some team leaders, what we call head internal auditors. So I have one person who handles audit of JSW Steel Limited. I have a separate person who handles audit of JSW Energy Limited. There's another person who handles audit of JSW Infrastructure Limited. So we have a various head internal auditors. Below the head internal auditors, we have plant heads. So for example, if you see that in JSW Steel Limited, we have 3 major plants located at Karnataka, Maharashtra, and Tamil Nadu. So we have a station plant audit head there. So they report to the head internal audit of JSW Steel Limited. Each and every plant head auditor has his own team which reports to him. So this is a structure. Parallel to this, we also have a chief risk officer. So each and every company where risk committee is compulsory, we have a chief risk officer, designated chief risk officer. Under them, we have team members. So this is how this organization is structured. As far as manpower composition is concerned, currently our strength is 30 people. Last time we had a 38 people, but this time strength has reduced to 30 because of COVID. And we have changed the strategy this year that we are outsourcing some of the few audits. So current composition is 30 strength. Out of the 24 are chartered accountants or ICWAs. There are 4 graduates and there are 2 engineers. So if you see that, it is a well professional qualified department, I will say that. Now, what are the services we offer? So we bucket our services in 2 categories, what we call assurance service and consultancy service. In assurance service, first component comes pre-audit. So there are companies where we have put a system of pre-audit. Just to give an example of JSW Steel Limited, we have transactions, whether it's a purchase orders or payments, crossing a threshold limit are getting audited first before making the payment. So any purchase order which is released to the vendor, if it crosses a threshold limit, it gets pre-audited. Similarly, any payment, if cross a particular limit, it has to be pre-audited before money going out of our bank account. These pre-audits are normally outsourced to external CA firms at the location. They directly report to our department. They do not report to finance department. So that is the first pre-audit to take care of integrity of the transactions. Apart from that, we carry out operations and process audits. In the operation and process audit, we try to see that whatever processes are being followed by the company, whether there are controls inbuilt in that, whether there is any possibility of simplifying any processes, whether there is any possibility of avoiding any errors or frauds. So that is operation audit. As you know, JSW Steel Limited is a company which is in engineering type of a company. So a lot of technical issues comes up. Our manufacturing units, the technical audits becomes one of the most important component. So we have a separate cell who carries out the technical audits. I already told you in our composition that we have few engineers with us. So they carry out the technical audits and then they report to us. We send and discuss those observations with plant heads and carry out the improvements. The last part of assurance service is what we call information technology audits. We have a highly digitized company where we have SAP as an underlying platform for recording the transactions. Apart from that, we have a lot of add-on packages. For example, we have GRC, we have Ariba, we have Vistex. Vistex is a software for sales and marketing. Then we have a lot of customer-facing and vendor-facing softwares. Because it is heavily digitized, we need to take care of the IT risk. So a separate audit is being carried out by a separate cell in the audit department itself. We have 3 people who are CISA qualified. So these people go to various locations and carry out IT audits. The second part, the second bucket of service, what we call consultancy services. So in consultancy services, we try to give value-added services to the management. One of the things is cost reduction. We carry out a lot of studies to see that how can we reduce our cost. cost of operations. I already shared with you that last year our cost reduction was around 124 crores. Imagine that the department of the departmental cost is maybe around 15 to 16 crores. Against that, we are giving, you can say that around 10 times of the return. Apart from that, we also prepare what we call delegation of power. We prepare delegation of power showing that what is the financial authorities given to the various levels of the management. So this is a document clarifies to each and every operating person what is within his power. Through that, we try to see that how can we avoid conflict of interest, number one. Number two is to have a proper hierarchy of risk taking in the organization culture. So there's a delegation of power. Another thing also we carry out is writing down SOPs. Whenever any new activity comes or any business starts, normally the operating management call us and they say that they need our help in preparing standard operating processes, so that there are controls, internal controls inbuilt right from the day one. And as usual, that we also carry out some special assignments which is requested by the management. We also carry out a lot of fraud investigations whenever it is required. Apart from these services, there are other activities also we carry out. So first is risk management. I told you that we have separate cell for risk management, which is reporting to risk committees. So we get involved in preparation of risk management policy for the company. And we also implement ERM framework at various key locations. So if you see that in most of the plant locations, we have a risk committee at the plant level, which reports to the corporate risk committee, and corporate risk committee reports to the risk committee of the directors. So this is a framework we have. We also facilitate a preparation of business continuity plans. We already completed for 2 companies out of 5 listed companies. 3 companies are in progress. Pre-audit I already explained to you. Apart from that, whenever new softwares get implemented, we get involved in that. So for example, whenever there's a SAP got implemented in various companies, GRC got implemented, Ariba legal compliance software, we have separate software for exempt benefits. So we are involved from the day one to see that these softwares have a controls inbuilt from the day one, and they are serving the purpose. Now our company has grown leaps and bounds. I remember when I started this my journey with JSW Steel, we were around 15,000 crores. Today we are around 150,000 crore turnover. So you can say it's around 10 times. Now this lot of growth has also come when we acquired new units and new companies. We have taken over the companies like Ispat Limited, Monith Limited, Bhushan Power and Steel Limited in the steel vertical. In energy vertical, we have taken the hydropower plant of JP Infra. Now, when the different companies are acquired, they come from a different culture. They have a different IT platforms. They have a different philosophies. So we get involved from the day one to see that how these newly acquired companies are integrated with our JSW culture. There are 3-4 important things, components of that integration. First integration is organization structure. The way we structure, we try to replicate that structure in the newly acquired companies so that there's a proper corporate governance from the day one. We also try to standardize the policies and processes. We see that what are the processes newly acquired companies are following and try to standardize with our processes. Same is case with the delegation of the power, so that proper risk-taking culture is installed from the day one. And last is the IT platform and IT audits and others. Just one small thing on how we carry out the audits. So our audits normally start with preparation of risk-based audit plan. We analyze what are the risks associated with the businesses, what we call business risk, but that also we call impact. Then also we go through our past experience to see that what are the process risk in that. Then we multiply, we rate those things. Each and every business unit we rate under those risks, business risk and process risk, and based on that we prepare audit plan. This audit plan is put to the audit committees, and once it is approved, we start the audits. Once audit plan is approved, annual audit plan is prepared. Based on annual audit plan, we prepare quarterly plans. After preparation of quarterly plans, we start the audits. After completing the audit, first we circulate our draft report to the local management and the relevant process owners. We discuss with them, get their comments, get their views. After getting their comments and getting their views, we prepare a final report, which is put up to plant heads and the presidents for their comments. Once discussed, the final reports are discussed, we take out or shortlist, you can say, the key audit findings from the materiality point of view, and summary of those key findings is presented in audit committee in form of a presentation. Apart from reporting the key audit observation, we also report to audit committee what are the agreed action plans, and we also, in the next audit committee, we also show them an action taken report, whether those actions have been taken by the management or not, or what are the problems in taking those actions. Just to give you one of the glimpse how we track our journey in JSW and how we go for the continuous improvement, I thought of putting some numbers here. So in 2007-8, when I joined this company, the turnover of a company was 15,000 crores. We have 28 manpower in our department. And as a value addition, the cost reduction was around 2 crore rupees, which are reported. And there were 72 reports were issued by this department. So I worked out the 3 parameters on which we thought that we will see that we are delivering proper quantity and quality. So in 2007 and 8, if you see that 72 reports were generated by 28 people, so around roughly 2.5 reports were generated by each person in a year. The turnover covered by each person was around 536 crores. So against 500 crore, 36 crores, there was one auditor. And the cost reduction reported by one person, each person of a department, was roughly around 7 lakh rupees. Slowly, we started improving our quality of the audits, so that cost reduction got increased. Apart from that, we also try to cut down the non-value added things which were carried out by the department. Certain few audits like pre-audits and other things we outsourced. And we also improved on the efficiency of and productivity of our own department people. If you see in 2020-21, that is last year, the turnover was around 1,04,000 crore. This year we are going to achieve 1,50,000 crores because of acquiring of some new units. Okay, so 2021 we had a turnover of 1,04,000 crores. Manpower was around 38, and we had a cost reduction of around 124 crores. Number of reports issued were around 663. So if you see number of reports issued by each person in department, average was around 17. Turnover covered by each person in our department roughly was around 2,700 crores. And the cost reduction reported by each and every person roughly will be around 3 crores. So from 7 lakh to 3 crores cost reduction, you can see that how the quality of the audits have improved. This is from my side, presentation. Thanks a lot. Over to you.
Yes. So Harish, it was such a beautifully laid out presentation, I would say, because the way you moved from starting about your company, starting about the job, and I'll definitely want to say something at the end. But before that, I think we'll need to take, we just thought we'll have a small conversation with you to round up this part of the program. As you very correctly said, you have some 27 audit committees and 44 companies, and you almost have about 100 meetings. How difficult is it for you to track observations, present it in a concise manner, get agreement, most important, get agreement with the business heads? How seamlessly you seem to be. I feel you're doing it very seamlessly. How do you manage it, Harish?
Yes, I agree with you. It's a lot of difficult job. But one of the thing is that the way we structured our department. So what we do, we work in teams. So that's what I told you in our structure. We have a head internal auditor for each and every company. So we have designated head internal auditor. Under them, he has a team, and the team works seamlessly. What we do is that we have cut-off dates. We know that when our audit committees are there. So once we get a published calendar of the audit committees, we make a point that 20 days before the audit committee date, all our reports which are going to be presented in audit committee are get closed. When I'm saying get closed, that means issue a final report. The next 10 days, we discuss with all the senior management, whether it's a plant head, whether it's a CFO, whether it's a joint managing director, whether it's the CEOs or CEOs. We discuss the observations which we find that these are the key observations which will go to audit committee. And then we get buying from them. Once a top management is involved, then you know that the things down the line will become easy. So our top management also take all those audit observations very seriously. They give us a lot of time in discussing with the process owners, and then they give their verdict that how this audit observation is to be resolved. Because of that top management support, we are able to finish those audits, and we are able to complete our presentations on time. And roughly around a week before the audit committee date, we release our folder, audit committee folder.
Quite a task, quite a task.
Haresh, I think we have already discussed about the expanse that you have got, the complexity, the number of locations, the number of plants, processes. In addition, we have discussed, not only internal audit, the risk management, legal compliance, business continuity plans, drafting the SOPs, for new processes and new companies, managing the culture, integrating them. When you have, inorganic growth, you want to manage the culture of the companies which are integrated. So there's such a lot of things which are being done. One thing which stands out is you have talked about the journey of 7 lakhs per person saving, 2-3 crores plus saving. Now, is this saving mapped on the profit and loss account, or how is it an agreed saving between the process owner and yourself, or is it mapped onto the profit and loss account and then quantified? So how do you quantify that? Number one, that's because it can be an area of dispute with the process owner per se. Number one. Number two is, does management value the cost reduction part, or do they value the whole thing? Because there's a structure in terms of legal compliance being delivered, risk management being delivered, which is much more important than that 3 crores per auditor. So your views on it, or your views on the same. Managing the culture of the new company, I would say that is much more valuable than showing some saving on paper. So 2 questions which I've asked you, please, your views.
Dipji, you're cornering Harish. I'm also very keen to hear the answer.
Okay, first of all, how we compute our cost reductions. These cost reductions are not the cost reductions which we reported. It is reported and implemented. So if any audit observation or cost reduction is not implemented, we don't take into our account. What we call is a cost reduction in progress, that we track it separately. So that is very clear that it is got implemented. So you can see those numbers in your profit and loss account. Okay. Now coming back to the management view on cost reduction and other thing, it actually differ from time to time. I remember in 2007 and 8 when we started our journey, the first thing management told me is that we want to see that there is basic hygiene in the systems and processes are there, because earlier they were not having any stabilized, I will say, internal audit department. People used to come and go. So sometimes some audits get outsourced, some audits were carried out in-house. So idea was to have a basic hygiene. So we started with the basic hygiene. Then another thing came that, okay, you started the basic hygiene, but we want it should have some business understanding. Don't report the theoretical things which are good in listening, but there is no business impact of that. So that's how we started from the next year onwards, and that is 2008 and 9, we started risk-based audit plan. So instead of doing audit of all the things, we started doing risk-based audit plan, so that we know that where to focus more, where to focus less. And through that journey, we started, and then started value addition emerged from that. So this cost reduction and all those things started coming out of that. Once management saw that, we are giving a lot of, value added services, they become more greedy and they said, okay, now we put you, we give you one KRA. So initial KRA was that whatever your cost of department is there, it should, you should give us as a cost reduction that, so that our department is free. It's like that. So this is how we started. So from 1 time of my department cost to 3 times of my department cost to 5 times of department cost. So this is how, we have started journey like that. Now, what has happened in the recent thing is that because I am working here since last 13 years and this department is matured, what management has told us this time is that the way we are growing, it is not possible to grow any support function in that particular fashion.
Mm.
If you see turnover wise, our group has, turnover, if you see 15,000 crore to 1,50,000 crore. So it's around 10 times it has grown. Now I cannot grow 10 times as far as manpower is concerned in my department. It's not possible. So we started saying that, what is a cream work which is there that we can do, and what is a non-cream work which we should outsource. So we started a journey like that. We started outsourcing slowly. We, gone into outsourcing model. So we started outsourcing from 5 to 10% of our work. We developed some of the firms, local firms, CA firms. We also took help of some big fours also. So that journey is still on. Currently, if you ask me, that roughly at a group level, our 20% work is outsourced. And at the JSW Steel flagship company level, if you ask me, it is around 30% work is outsourced. So we started outsourcing and we started focusing on the things which concerns the business. Now, what business wants? Business wants that a lot of new companies have been acquired in recent past. So they are not also, my management is also not interested in the cost reduction currently. They are saying that you help us in solving the problems. So for example, 2 years back when, I reported that, there is a 10 crore cost saving in exim benefits, which we missed out. How can we, take those benefits? From reporting that observation to finding out a software and helping management in implementing the exim software.
Super.
So we are now become part of a solution provider rather than a problem reporting team. So if you see whatever initiatives we are taking currently, we are the persons who are suggesting the solutions, and we are overlooking the solution also, that this solution is effective, it will solve the problem.
Wow. So very pertinent point. Gupji, I'm sure that has answered your question.
Absolutely. I think great, really great. It is wonderful, the journey and the thought process behind implementing things, and giving value to the organization.
That is
I think that is really coming out very clearly.
great. I have one more
thing.
Yeah, sorry, Haresh. Sorry.
So another example I wanted to give regarding risk management. So in risk management, earlier we were facilitators of collecting the risk from the various departments, putting in a structure, putting the risk management processes what they give in a proper format, reporting to the management.
Correct.
From there, what we do currently is that we scan the external environment every month, and in every month we have EC meeting. We make a presentation on what are the potential vulnerabilities which could be there to our businesses. So whether it's oil price going up recently, or whether it's a Ukraine problem which is going on, or whether it's a COVID risk, which all the things, all the indicators we already told to management on monthly meetings. So from reporting the risk to finding the vulnerabilities or identifying the vulnerabilities which can impact our organization. So this is a journey of risk management department.
Very true. Very true. Harish, I just have one more question on, see, you have got the way you all are structured is you have a plant auditor, you have a plant head, etc. Now, how do you carry observations that you find in one plant to the other plants, because these plant heads are at a particular place, say in Maharashtra, whereas the similar observations or the similar activity happening in your Karnataka plant. How does this cross-pollination happen?
I agree with you. When we started this journey, this was the problem which we faced. Now, what we do is that when we carry out the audit, we carry out the same audit across the plants.
Okay, theme audits. Like
so we have a theme audit. So, for example, currently, say order to cash cycle is going on. So, in all my 3 plants, order to cash cycle is going on. So, we combine those observations because in audit committee, only one presentation will go, combining the 3 plants.
Wow.
Right. Haresh, what is usually the cycle time which is taken to one is conduct the audit, and number 2 is to get it. You spoke about it earlier, various levels, and you get it ready 1 week before the audit committee, your key significant findings. So what is the cycle time for actually conducting the audit from start to end, and then the cycle time to get the comments and finalize the report?
It depends upon audit area to audit area. So it can range from 3 days to even 30 days for conducting the audit. Yes, regarding closing audit report, reporting to audit committee, normally the cycle goes around 20 days.
Okay. I think with the reduction, you're expanding your audit expense and you're outsourcing certain parts. You talked about 20%, 30% for your JSW Steel, but your manpower has gone down. That's number 1. And number 2 is we all know how difficult it is to find right manpower in the market. Yes. Good quality internal auditors are at a premium and not easily available. So how do you actually get internal auditors from outside? Again, how do you actually train outside firms to deliver quality to your organization? Because that is again one more area which is very difficult. So how do you manage that? Because it's not easy to manage a group of 27 professionals, chartered accountants and engineers, 30 of them to manage all together and then ensure that each one of them delivers, because you are doing such tight rope walking that you've got so many audits, so many assignments going on that everything has to fall in line. You cannot mess up anywhere.
Yes. Manpower is definitely one area of the concern, particularly in last 2 years. It is very difficult to find right type of talent to get involved in to get recruited. So this is one of the problem also forced us to re-look into our strategy. Earlier, we used to depend upon 100% in-house audits. Now, the problem we face is that when a person leaves a company and the time you get the replacement, sometimes it was 3 months to 6 months, because you need to find right person. Then he may be working somewhere else, so he has to also serve a notice period. So those are the problems which we started facing. So that's why we started building a backup. So if I need 35 people, I used to have a couple of people more who can work as a stepney. But since last couple of years, that also luxury has gone. So we thought of how can we build some backup for us. So we started identifying some CA forms. So what we do, some of this, we have 3 categories of CA form, what we call. We categorize them in category 1, category 2, and category 3. In category 1, you can say all the big 4 comes. We have category 2 firms which are specialized in internal audit, and they are in the business of giving the services for more than 15 years. Category 3 are the firms which are the new firms. I'll say that they may be having 4 or 5 years of experience of delivering audit services, are the local firms. Category 3 firms normally we choose for pre-audit, or we choose them for conducting the stock take and some routine transition type of the work. Category 2 firms we deploy, where what we see is that if I'm deploying a category 2 firm in a company which is a normally associate company, which is not a listed company, but associate or subsidiary of listed company. And in that particular company, our own manpower is also involved. So it's like a co-source model. So he is giving 50% of the time. The category 2 firm is also giving their 50% of the time. So it is a mix. So it is a closely held audit conducted by a category 2 firm. In category 1, where we have big 4, definitely we give them full freedom to carry out the audit. We only get involved at the time of closure of the report, or closure of the audit committee presentation. So this is a way we have tried to build a backup for to address the manpower issue.
Really great, really great. I think good thinking.
Perfect. So I think it's 40 minutes, Dibji? Or
yes, please.
Yeah,
yes, please. I think before Satish closes it or concludes this, just one additional take. Haresh, would you like to share in your 30-year experience? Would you like to share any incident, whether it is funny or painful or whatever, in your journey, any incident in internal audit which you felt? Because you have been so open, so vocal. I've not seen. Let me compliment you, because I've not seen a chief audit executive so open with his working. You have just opened your heart out to everybody so that people can learn, people can know, because that's the way a professional should be doing, contributing to the profession per se. So any incident which you feel you want to share, whether it's a funny incident, painful incident, anything in internal audit in your journey, if there is such an incident, please.
Let me recollect a couple of instances which I can recollect is that, I remember that I was working with the Godrej group, and I was a young auditor and very, passionate auditor, doing the audit in detail and finding out. So I remember that, in the first audit itself, I was able to find out a fraud. So once I was able to find out a fraud and prove on the paper, yes, this is a fraud conducted by one employee. Okay, my reputation in the department definitely goes up. And I thought that, I am a good investigator now, forgetting that, internal audit and investigation are two different skills. So the next time when any fraud investigation came, I volunteer myself. I say, I will handle it independently and I will do it without having the skills. So I conducted the audit, I conducted the investigation, and we called the person for integration. And we were sitting in a room, and I was asking him the question passionately and trying to prove him he's wrong and he has done something. Out of blue moon, what he did that, there was a water bottle was there in the table. He threw the bottle on me.
Oh.
Luckily, that bottle was a plastic bottle, and I could duck that. Then I realized that before you carry out any audit or carry out anything, you should look into your skills. Whether do you have skills? Do you have experience? Wow. Don't jump it because you know everything. Don't feel that you know everything. In another instance, I remember that I was interrogating a person for the fraud, and he was around 50 years old. He has spent more than 20 years in a company, and the moment I was entering into that conference room of interrogating him, one of my senior colleague called me, and he told me that delay this by half an hour. I say, why you want to delay by half an hour? He said, you're not done your homework properly. This person has already suffered 2 heart attacks. Okay, so I don't want any unpleasant thing to happen. So be careful. This is his medical report, because in our company, there was a policy that anybody who's 45 years old, he has to go through that annual checkup. So he's given me the report saying that read this report, what is written in the report. So be polite while asking a question. You maybe be firm, but don't raise your voice. Don't do this, don't do this. And remember that we had one ambulance ready.
Oh, yeah.
It was very funny that I have ambulance ready and I'm going to the room and asking some questions, thinking that the person has committed a fraud. So the things which I learned that doing the audit on a computer, on a data, on the sheets is easy. Dealing with the people, you need to have proper homework, number one, and you need to have proper skills. That was a learning which I learned from Godrej, and that I carried forward in my life.
Very good.
Very wonderful. I think very
so beautifully explained.
Yeah, so explained so nicely, and I know wonderful experiences as auditors. Just one or two which you have shared. I'm sure you would have gone through such a lot before you have reached the top here. In JSW Group.
Great.
Satish, over to you.
So yeah, this talk could have gone on and on till evening. I'm sure Harish has got so much of stuff to share with us. And I like the way, Harish, you very nicely, as I said in the beginning, you very nicely packaged this whole 20-minute talk of yours, which helped us to prompted us to ask you questions. But amazing that you're handling a great group. I remember visiting your Vijayanagari plant as a tourist, of course, and real great experience going to that museum, going to that store, sitting on that beautiful kind of a water body that you have, seeing the swans over there. So I was thinking that this environment is so beautiful outside.
Yes.
How beautiful this environment must be working in the company. And now talking to you, Harish, I'm more than fulfilled, and I feel that day what I thought was right. Such a good atmosphere you created in your department itself, because since I know some of your team members as well, and you so openly, as Dipji very rightly pointed out, so very openly pointed out, shared so many things with us, and even we with our gray hair have learned, have taken away something for us, back home when we go back to our drawing boards. So and I'm sure this is a great learning for the youngsters, for the people who have just entered the profession. There's so much of great learning. I like the way that you're very open about your cost reduction targets. The way you explained it per person was an eye opener for me. That per person, per audit employee, how you saved it, and that slide journey, you called it journey for continuous improvement. I think was a very brilliant, a different way. And the learning for us is that not about cost reduction, not about per person, but the way you can show data in different ways to attract attention. I think that is the single lesson I extracted from that slide. Besides, of course, those numbers which are very relevant to JSW. What I particularly liked in this whole presentation was the way you very beautifully summarized your work into assurance, and you gave 4 examples of what you do in an assurance. On consulting, what do you do, and how do you help the businesses in improving their own processes? Because we are ultimately on the same side. We may have a different outlook to the work, but it's not us versus them. It's we versus we, to make a better and a stronger we. I think that is the focus of internal auditing. However, whenever anything is there wrong, of course, we don't want bottles to be thrown at us. But so that was a beautiful example. So, but we have to call out when anything has gone wrong, and you brought it out so beautifully. And that residual category, you called it the others, but I think the way you explained the risk management, BCP, and pre-audit, and getting involved in the solutions also, and the example, the icing on the cake for me was the example you gave of that foreign exchange, how you exim, that how you went from the observation, okay, and went into solution mode, which was also in your slide. I noticed that there was exim in your slide. I was thinking what you're actually involved in an exim, and it came out from this example that you actually found out something and then went through, you held the business with you totally, completely. And that's the learning that we got. It was so nice talking to you. I'm sure I'm echoing the sentiments of Dipji as well. And I must thank Sama Audit for having taken this whole strong initiative and taking few ideas from me, of course. But Sama Audit is in this space, which is of auditing. And I'm very happy that this initiative has been taken. And our guest of backing Harish as the first inaugural speaker for this series is a winning bet. So on this note, I think I'll conclude, unless Dipji, you have the privilege of having the last word. But Harish, from the bottom of my heart, me personally now, I'm very, very happy to have shared this 45 minutes with you. It has been a very enriching session.
No, Satish, you are absolutely right. I echo your sentiment completely, and really thankful to Haresh.
Thanks.
For so openly sharing, and a very complex work being carried out by him, as a chief audit executive. Thank you.
Thank you, Deep. Thank you so much.